Good morning, everybody. Welcome to OptionPit.com, the stock market and volatility report. If you want to hear Mark, well, just listen to Mark Kramer when he's on. We post it right there. If you want to hear me, you could become a Gold Platinum or Pro member. I don't do a lot of the forward-facing stuff that Mark does, but I do a lot of the education at Option Pit. If you like our blog, so here's a sample of our blog, right? We don't like posting stupid blogs, right? Now, I'm never going to give you the exact trade because I save that for actual Option Pit paying customers. But what I will give you an idea is, because we spend all day in chat rooms teaching and stuff like that, the ideas that seem to be good enough that can make a blog. So of course, our clients, they get to see them first. That's the way it is. But you get the idea in our blog. So today I'll be posting something on Boeing. It's moving around. Also, Boeing will be in our chat room. But it's the same ideas. But I just want to let you know that most of our customers will actually be there first. So if you're just looking at our free stuff, you'll be there second. Okay. And this is also a reminder. This is for educational purposes only. Trade options at your own risk. Now, fun part. Oh, thanks, Charles. You like the blogs? So on our money management class, this is how this is going to work. I'm going to show you how to take vanilla option strategies, put a kink in them, and look at a lot of stocks that I think are good long-term buy potentials. But we're going to use options to reduce the risk, teach you to reduce the risk, and increase the reward potential. We're also going to talk about portfolio managing, portfolio hedging strategies to try to teach you how to kind of buy that, how to sort of buy that protection, get the market to pay for the protection, right? And so it'll go like, we're going to start you with like the vanilla strategy for the first 20 minutes. And then, bang, we're going to hit you with the Option Pit method on how to do things for less risk with better chance of return. So it's going to lull you for the first 20 minutes. And then, bang, we're going to hit you with stuff that you probably haven't seen before. Also, if you're an investment advisor and you want a CE credit, our course qualifies as a CE credit. All right? Sign up. Become a master. Don't become a non-master. And also our Professional Trader Summit, we're going to release some stuff, some of our sheets that help you to find trades, show you how to use it. It's going to be a great summit, hands-on learning how to trade, manage trades, understand market conditions, probably the best one we've ever done. And you might have fun along the way. June 4th through 7th, details are coming soon. We're trying to book some rooms as well. So anyway, stuff going on at Option Pit. For all you that are used to it, you already know the routine. For those of you that are new, you might enjoy it. Okay, what's going on? So I think today I would say the most significant thing is for the first time I can remember this, so 6 months, we're actually seeing, so Option Pit has this kind of theoretical value indicator here. That's the green line. The red line is just the VIX curve, right? So right now, like for the first time in ages, we actually have a little bit of edge. We're starting to get the futures are starting to inch over the curve a little bit. So we have a theoretical value. So it's for a long time, we actually have real decay in the futures. The back end of the curve is very flat. So I still find the back end of the curve inexpensive. So we'll talk about that in our vol newsletter class tonight. Ways we can look at that long-term vol buy back there, but it's weird because it doesn't move. But there's some short-term stuff. I put out a trade idea for our vol newsletter this morning. That, by the way, is live. If you want to try it for 17 bucks a month, I'll give you 1 month for $17. Send me a note, Andrew at OptionPit.com. Daily vol forecast, daily actionable trades. We probably put on one thing per week that we follow, but there's always something to look at and do. But I can't follow, 10 trades a week. I leave that up to you, but people like it. So from a vol point of view, we have just a lot of decay and so the old VIX calculation is about to break 13 and the 12 handle hasn't happened in 6 months. So I'm thinking we're looking at a 6-month low in vol today. China deal, not done. Russia problems, not done. Brexit, not done. All this stuff totally up in the air, and we're hitting a 6-month low in vol. I find that really, really odd. I structured a trade for that. It's in the vol newsletter, and we'll see what happens. Now, fun stuff. Mark has some good ideas in our option pit in his wheel, KHC. We'll look at that. Here it was. And you know what I find interesting? This was a $90 stock. It's not a stock I would have never, ever cared about, right? It was a $90 stock, and now it's here. So they basically took the whole company and just, all right, 2/3 off. Probably a great wheel candidate. We'll discuss it today in the chat room. Also, I think we could come up with a nice pair to be long SPY and long volatility at this level. The way it looks, we're about to test those highs like in December, and might as well break through it, right? The Europeans are going for QE again. The US has $1 trillion deficit. What the heck, man? Keep on spending money and the market rallies. So don't want to be in the way of it. But again, we'll find ways to kind of buy vol in both directions. Also, we will look at Boeing. It seems to me as the news comes out, there's more known news. Today's probably the first day where we haven't had, what, a 15-handle move in the first 30 minutes. So those are the ideas I have. I think Boeing will probably be back to its old highs within 2 months. Okay, all that can be structured. That will be essentially the block today and how to do that. And that's it. And we're coming right into earnings again. A lot of the technology stocks have very, very, very low volatility. Coming into the earnings cycle, Microsoft is approaching its all-time high, and I have no doubt that it will pop through it. So just trades like that, I'm just going to keep it going. The low vol, ride your long gamma up, and just buy some puts for protection and close your eyes and wake up in 2 weeks, and you probably have something. All right, I don't think it's going to be a whole lot more complicated than that. And you keep those puts for the Brexit spoiler, the trade war spoiler, or the just general, the tweet that comes out. So that's Option Pit for the Option Pit vol report for this morning. Check out our event. You're going to learn something in our masterclass. Check out any of our services for teaching you how to trade volatility. That's pretty much all we do. And we will see you later, and possibly, look out for next Saturday class. It'll be in early April. All right, everybody, have a good